Of U.S. consumer inflation data for August, the broader Hang Seng Index in Hong Kong closing 1.2% lower as losses continued. Mainland Chinese stocks closed lower as well, with the Nikkei in Japan rising 0.7%. Looking at what's happening on the European side, markets on that side of things pulled back slightly. U.S. consumer price index readings for August are due at around 2:30 South African time. It's expected to show inflation stateside continuing to run hot. The latest print comes after U.S. producer prices leaped 8.3% on an annual basis in August, the largest yearly increase since records began in November 2010. To get into the actual details of all of the themes playing out in global markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. A check-in on the JSE at this particular point, given everything that is happening with what's going on in China, with the tech regulations. How are we reacting to some of these themes playing out?
Good day to you. Unfortunately, we are on the negative. We have wiped out almost all the gains that we've seen yesterday. And because if you see the tech issues that they don't stop with China, that continues to affect our NASPAs, our proxies, and also for the fact that the resources are down. You know, the likes of palladium down almost 2%, copper down over 1%, gold as well. That also continues to affect our resources. And those are the indices that are taking the JSE down. But as you said, all eyes continue to be on the CPI from the US that will be released later today.
Any company news that caught your attention? We had ARC Capital, or rather African Rainbow Capital, releasing their financials this morning.
Not doing too badly, but what caught our attention mainly was the likes of Clicks, their trading update. We know that during the unrest, almost 52 of their stores were affected, and that's almost 6% of their group store base. But the guys are coming back as they have sufficient insurance, and they've made claims of almost 726 million. So far, 30% thereof has been paid, which is almost 216 million. So as a result, the diluted headline earnings per share because of the unrest will be anything between 0 and 3% increase. But if you exclude the unrest, then they will have got anything between 8 and 13%. And their sales growth continues to be impressive, over 8%. And also the likes of storage not doing badly. They shows you that their business model continues to be resilient. They have announced a JV with Nedbank, and anyway, Nedbank has been their primary debt funder for over 10 years. And the company continues to do well, as now they have to develop 2 sites in Morningside and Bryanston for over 200 million. And they've got a pipeline of almost 8 properties that will cost them almost 685 million, and they acquired 2 other properties in Cape Town.
What do you make of SA Inc. stocks relative to their global peers? Are you seeing opportunities?
Definitely, especially when it comes to our retailers and our bankers. As we have seen that at some point when even including today, our banks continue to be resilient, because that just shows you that our banks are well capitalized and they will still be doing okay should things start improving from now on. And when it comes to our retailers as well, they are more or less linked to what is happening with the banking stocks, and with consumers getting vaccinated, people going back to work, the economy expected to grow, all the high expectation that infrastructure spend the government has announced, it will get to be implemented. Those are the things that probably will help our economy to start growing. And also when we continue to pay attention to what is happening at Eskom, trying to improve that, then I think our retailers and our banks, they don't look too bad.
So I wanted to ask you about share buybacks. And the reason I wanted to bring that conversation up is that you look at what's happening in China with the regulations, and it brings back, memories of Naspers doing a share buyback. And the thing about share buybacks is that you can't really call it, because you can do a share buyback and it's a good thing and the stock price rises, or you can do a share buyback and in the next 6 months or so, something like what is happening with the China regulations happens and it impacts your share price. So what's your view on share buybacks?
You know, normally a share buyback works better for the company because, number one, when they buy back those shares, then it means they're going to cancel them, meaning you'll have few shareholders sharing on those earnings, the opposite of what happens with a rights issue. And also, we take the people who are running the companies as insiders. If they decide to do a share buyback at a certain price, they strongly feel that that price is very attractive. The share probably is undervalued. And that's also a very nice way to return capital to long-term shareholders shareholders because you are just paying them over the long run. So yes, as you are saying, you can get stuff that maybe you didn't expect, that you get issues that we are seeing currently with China. But fortunately, it's impacting the big guys, who've got huge balance sheet. I don't think that's going to be a very huge dent for them going forward. I mean, even what is happening now in the Chinese world, the guys continued to acquire some businesses in the likes of India. So you are right, but most often than not, share buybacks tends to be positive, especially for long-term shareholders.
Let's move things stateside, or I suppose not even just stateside only. Let's bring in the ECB in this particular conversation. Where are we in the conversation of tapering talks against the COVID-19 background that we still find ourselves in?
I don't think, given what is happening with the economy, which has been impacted by COVID-19, getting to be impacted by the new restrictions that we've just seen. I mean, the likes of China, they've just closed the city on the coast, which has almost 4.5 million people. It just shows you that companies or countries, as much as they thought they will be opening up, seemingly they don't have to do that anytime soon. I think the guys will continue to wait, and remember now the guys can only maybe start slowly. They're starting to buy less bonds. As we've seen, the guys have announced with the ECB, the US probably later this year. But also it's a question of inflation shouldn't be an issue. The biggest issue here should be the general economy, and especially when it comes to unemployment. If it continues to be this high, I don't see why will central banks start removing all that cheap money from the table.
Right. In terms of the, concerns that you're having right now, is there anything that, comes to mind, or are there some kind of, perhaps let's put it this way, is there light at the end of the tunnel despite all the negative sentiment that we are seeing, the impact on the markets? When you look at your screens daily, is there a glimmer of hope somewhere?
There is definitely. The question is when, because now the problem we have, the biggest headwind, is when we continue to get different variants when it comes to Delta. And I think the biggest one will be the issue that whatever vaccines that we have now are unable to deal with that new variant if it happens that we get one. And also the biggest headwind here is if the central banks, they've got it all wrong, they happen to be behind the curve and they start increasing interest rates more rapidly. But if they've got it all right, then I think things with time should start working out. But the problem, as we said, we cannot time it that in the next coming 6 or 8 months or 12 months, things should be back to normal.
For the benefit then of our viewers, what is the impact if they are behind the curve and they've got it wrong? Because there have been some economists who've been saying that the Fed is behind the curve, especially when they look at the inflation numbers, when they look at the jobs numbers as well.
Remember, if they've got it wrong, then it means if they thought they will gradually start increasing interest rates, then it means they have to increase the speed. And as we know that when you start increasing interest rates, they tend to be negative for equities. And we know that there are a lot of companies who went out to go and get cheap money, their repayments are less. So it means those repayments will have to go up because interest rates will be going up. Then as a result, that will continue to eat into their earnings.
Right. Events that you're going to be keeping an eye on for the rest of the week?
The retail sales numbers which are coming out of the US tomorrow and also locally. And for us here, remember, just like most developed countries, our economy has to be more than 60% driven by consumer demand. So retail sales continue to be a very important component when it comes to that. So we'd like to see an uptick to show us that at least consumer confidence is doing okay, household finances have improved, and that gets to be reflected with people going out, spending money on big items.
All right, Makwe, thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers talking to us about some of the themes that are playing out in global markets, what he's looking forward to as well. And we did bring in that conversation about where we are when it comes to tapering talks. We're going to take a quick break, and when we come back, we'll have more news for you.